Management fraud. All right. Collusion, management fraud. Let's talk about that a little bit more here. Collusion is the most effective way to circumvent an internal control. Use that information wisely. Don't be the one perpetrating the fraud. It is the only way to effectively circumvent segregation of duties as well. As such, it would be most difficult for an auditor to detect and for a company to prevent. Because if two people are, or even three people are working, three capacities and scrubbing the numbers and actively working to hide it, that's going to be difficult. As we mentioned, fraud and error are both equally as important, but yeah, here you have someone actively trying to hide the messing up of the numbers. One way to combat this is to require vacations for key employees at varying times so that when one of the colluders is on vacation, so they're forced vacation, right? Meaning they're forced away from the company and they don't have access to logging into the records, the company, the fraud should cease and the change would be detected. But again, that might sound strange to you, and it does. Let's just go over it again. If someone, if they're actively weekly committing fraud and then one of the employees is forced to go on a semi-surprise vacation, now it's not like you're just screwing over this employee, right? You're still going to pay them. You're not forcing them to get on a plane and go anywhere, but you're basically just saying, hey, I hope you understand this is a policy for our company to just say you're not working this week, because then if there's fraud, the collusion won't be able to happen. And then through analysis, variance analysis, through analytical procedures, you'll be able to see, when this one employee went on vacation, all of a sudden our cash balance went up a lot. That's very interesting. Maybe we should look into that further. Now, while this is a great preventative measure, if you don't do anything to correct that or to analyze that information, it's going to all be in vain. So you got to make sure you actually follow through with that. An inherent limitation to internal control is the fact that controls can be circumvented by management. Again, these are the people in charge, the head honchos. Management override is essentially the same as collusion, except that the person in management can enact both portions of the fraud by themselves. This is definitely a good, a lot of good multiple choice questions can come from this. Management is typically in the best position to perpetrate a material fraud because management can override controls to manipulate accounting records and prepare fraudulent financial statements. Got to watch out for management. Sneaky, sneaky people. When it comes to accounting estimates and the application of accounting principles, it's often to detect fraudulent intent because this is very subjective. You say, oh, yeah, we thought our asset was worth $1 million, not $500,000. Oh, yeah, well, we used this model instead of that model to value it. Because there's great level of subjectivity here. So now management could have really just been, let's just fraudulently state that our asset's worth $500,000 more than it is. That's a problem. But if you're auditing them, they could just say, oh, yeah, no, we just made a mistake. Sorry about that. And something to watch out for. Either way, you could investigate that further, take it as you will. But as long as the numbers are right, that's important. Management fraud, got to watch out for it. The risk of management override of controls, the following items could be indicative, and this is not a full complete list, but these could be indicative of an override of controls and should heighten the auditor's level of concern. So GL accounts that are rarely used become active. You could have a cash account, if we're talking GL, maybe the cash account is 1,000. Maybe they've got 3 bank accounts, right? 3 bank accounts, we've got bank account 1,000, bank account 1,001, 1,002. And then 1,002 is just for years, it's had a zero balance. There's no cash coming in or no cash going out. Well, 1 year, let's say, money starts coming in and going out. In general, regardless of fraud and regardless of override of controls, that should be something the auditor investigates. Like any accounts you see that become active, any new accounts added, any accounts that become inactive, the auditor should ask questions because it's just what's going on there. Let's understand the business. Again, just regardless of fraud, but that could be indicative of fraud because the management's trying to use an account that is dormant to just do whatever it is they're doing. Another thing is post-closing journal entries are made with no explanations or comments. So kind of just like at the end of the year, after the books are closed, all of a sudden there's these strange journal entries that just have no comments. And if after the books are finalized and closed, there are journal entries made, so it should be all good, but it's not. There should be significant documentation saying, oh yeah, we did close the books, but we found an issue, or the auditor found an issue, and we have to fix this. And it should be well documented and made known throughout the company or within the accounting department. Lastly, someone who normally does not make journal entries begins making entries. That's a problem. I mean, journal entries are critically important. That's a very important part of the business because they flow through to the balance sheet, income statement. super important. So you should know who's making journal entries. And if someone new starts making journal entries, you should probably investigate that. And probably, I mean, you should. Why are you starting to make journal entries? Is this just a new responsibility for another person? And also remember, journal entering is record keeping. If this person has custody or authorization and they're also doing journal entries, that is a problem. As I hear in every audit, when assessing risks due to fraud, there's a presumption of improper revenue recognition and management override of controls. Meaning, you should, again, professional skepticism, you should always assume that there is improper revenue recognition because this is just the most likely, most incentivized, and most, it makes sense, right? Revenue is going to be the thing that someone would want to overstate the most, is just saying, look, we were so profitable, we overstated revenue, so I get my bonus. And management override of controls, you should just always assume that there is management override and investigate that further. There will be other presumptions. We'll talk about those. Yeah, overstating of assets, understating of liabilities, but just talking about these two right here, right now. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.